Wow, what a week for the markets. It felt like they just slammed the accelerator and never looked back. Global indices are soaring, optimism's everywhere. But here's the real question. Is all this euphoria actually built to last? Because under that sea of green, the story gets complicated. Inflation's cooling, great. But politics are shifting, consumers are slowing, and yet somehow, markets are flying. From Wall Street's triple shot of optimism to Europe's uneven rebound and Asia's mixed recovery, this week's moves are anything but simple. So stay tuned, because in this episode of MacroNav, we break down what's really driving this rally, what could pull the plug, and what you need to watch next week when the Fed, ECB, and BOJ all step up to the mic. If you love getting clear, data-driven market insights, share, like, and subscribe, and make sure you watch until the end. This week's wrap-up is loaded.
Wow, what a week for the markets. It felt like they just hit the accelerator and didn't look back, shrugging off all kinds of jitters in the background. But here's the big question. Is all this optimism actually built to last? Okay, let's dig in and unpack what's really going on behind these big numbers. And I mean, what a week it was. This wasn't just some Wall Street story. No, this was a powerful, widespread rally pretty much everywhere. We're talking solid gains in the S&P 500 and even bigger jumps, over 3%, in Europe's FTSE 100 and Japan's Nikkei. On the surface, it's just a sea of green. The good times are rolling. But this is where the plot thickens, because under that shiny green surface, you've got this really weird mix of ingredients. You've got inflation cooling off in some places, which is great, but you've also got huge political shifts in others, and some consumer data that frankly looks pretty weak. So how does that all add up to a rally? That's the puzzle we're going to piece together. To figure this out, we've got to start in the United States, because that was really the epicenter of this whole wave of optimism. It wasn't just one thing. It was like a perfect storm of three specific forces coming together at just the right time. And this quote really just nails it. Think of it like a triple shot of espresso for the market. You've got a shot of cooling inflation, a shot of hope that the central bank is going to ease up, and a big ol' shot of pure power from a handful of giant tech companies. So let's break down each one of those shots. So shot number one, disinflation. The big inflation report, the CPI, came in at 3.0% for September. Now, that might not sound like a huge deal, but it was just a tiny bit cooler than what everyone on Wall Street was braced for. And right now, even a small win feels like a huge victory. And that tiny win had a huge knock-on effect. It led directly to shot number two, the market betting big on a policy change. The odds of the Federal Reserve cutting interest rates at its very next meeting skyrocketed to 97%. I mean, that's not just hope, that's conviction. The market is basically screaming, relief is coming. And the third and final shot, pure, raw power from a very small club of companies. We're talking about the Magnificent Seven. You know, the mega-cap tech stocks. They are on track to grow their earnings by almost 15%. In this kind of shaky economy, that kind of growth is like a giant anchor for the whole market. Now, this is what's so wild. Check out the contrast here. You've got those big seven growing at 15%, and then there's everybody else in the S&P 500, barely hitting double digits, if that. The bottom line is, this isn't some broad, healthy recovery. It's a story of a few giants basically carrying the entire index on their backs. And that, can be a little risky. Okay, so let's hop across the Atlantic now and see what's happening in Europe, because over there, the story gets way more complicated. We're seeing some really promising signs, some green shoots, but at the same time, there are these major weaknesses that just refuse to go away. And this right here shows you that split perfectly. On one side, you've got a key business survey for the entire Eurozone hitting its best level since May. That's a great sign. But then you look at a core economy like France. Business activity there has been going backwards for 14 straight months. That's more than a year. That's a serious drag on the whole region. And then you've got the UK, which is kind of its own fascinating story. The British consumer is just tough as nails. Retail sales surprised everybody by going up for the fourth month in a row. This resilience is a huge reason why London's stock market has actually been doing better than a lot of its neighbors. Okay, time for a big pivot over to Asia. What's so interesting here is that the region's two giants, Japan and China, are both rallying, but for completely different reasons. In Japan, the story is all about politics. In China, it's all about policy. Let's start with Japan, because it's a pretty simple story. Step one, a new prime minister takes office, which brings some much-needed political stability. Step two,
Her platform is all about growth, sparking hopes for a big government spending package. And step 3, well, the market loved it. Boom, the Nikkei just took off.
Now, China, that's a much more complicated puzzle. You've got Beijing pushing forward with its big, long-term industrial goals. But there's a huge piece missing from the short-term picture: the average Chinese consumer. And this chart tells the whole story. Look at this. Industrial output, the factories, are humming along, up a strong 6.5%. But then look at retail sales, up only 3%. See the gap? The factories are making plenty of stuff, but people at home just aren't buying enough of it. That's the missing piece that's really holding back their recovery. So when you put this all together, you realize that while this global party feels great, the foundation it's built on feels a little shaky. And that brings us to the week ahead, which is absolutely loaded with events that could either pour more fuel on this fire or put it out completely. So, investors are going to be glued to their screens watching 5 key things. You've got the big one, the US Fed's interest rate decision. You've got major economic health checks for the US and Europe. Another key inflation number, plus massive updates from the Central Bank of Japan and on China's factories. Any one of these could totally change the story. And just look at how packed this schedule is. It's bam, the Fed on the 29th. Then bam, bam, you get the European Central Bank and the Bank of Japan back-to-back on the 30th. It is a whirlwind of massive decisions that are going to set the tone for months to come. So we land right back where we started with that one big question. The rally is real, you can't deny the numbers, but when you look closer, when you see the US market leaning on just a few tech stocks, Europe's split recovery, and China's missing consumer, you have to ask, is the foundation under all this truly solid? I guess the coming week is going to give us our answer. Thanks for watching.
If you found this breakdown useful, hit like and share it. It helps more people discover MacroNav. And if you want more clear, no-nonsense explainers on global macro and finance, make sure you're subscribed. Stay ahead, stay informed.